What is the YouTube link you are offering right now?
Wait, sir, I will provide you.
Please, if you can just WhatsApp it probably, then I can share.
Okay.
Thank you. Thank you.
I have shared in our WhatsApp group the link, which is that same link.
Okay, I'm sorry, I didn't check that. I'm sorry. Okay, I will check that.
Yes, I request all, now let us not discuss because we are live on YouTube. So
Sure.
we can discuss on WhatsApp. Yeah.
No problem.
Good evening, friends. I welcome all, and now we are starting ICI motto song. I request all to put their right hand on their heart. Now I request our dynamic chairman of Ahmedabad branch, CA Fenil Shah, to give his opening remarks. Thank you.
Thank you, Bishan Bhai. The very distinguished panelist cum speaker of the day, of the evening, CA Khushroo Panthaky ji, CA Suresh Jain, CFO of Adani Power Limited, Shri Datta-Group CFO of Wockhardt Limited, our own regional council member, the curator of this particular panel discussion, and the moderator too, regional council member CA Chintan Patel ji, the secretary of the branch CA Bishan Shah, and all the participants who are attending this particular webinar. I welcome you all to this very pertinent session in present scenario. That is, you can say, audit under the COVID-19 situation. Friends, I would not say much because we are having so distinguished panelists and we are lucky enough to hear to them. But in my view, you can say that, friends, this is not an epidemic, but this is a pandemic situation. So the situation is bad, not only at a national level, but also at a, you can say, universal or global level. Second important thing is, somewhere I heard in our webinars itself that this is a black swan event. What is a black swan event? Then it's an absolutely uncertain event, which was never anticipated by anyone. Once it happens, it is very difficult to judge that what now more to happen. And it has more of the negative impact rather than the positive one. So in such pandemic and also the black swan event, very challenge for we all the professionals is to conduct our main attestation function and our main function of conducting the audit. So I think so that this panel discussion or this discussion is going to come out with various issues, and not only just issues, but we are going to get a practical solution to them from the panelists. So now, not wasting much of the time, I request CA Chintan Patel ji to take this talk further. Chintan bhai.
Thank you so giving the welcome speech. I think you already rightly pointed out that this is a time for all of us to think, how can we change the way we are doing it? Because this is now going to be new normal. And we need to learn how can we do audit even in this situation. We have along with us the distinguished panel. They are expert from their own area. And it's always my privilege to give a brief introduction of the experts. Mr. Manas Datta, who is a group CFO of Wockhardt. He's having a rich experience of more than 30 years in the field of corporate finance, treasury, M&A, taxation, and he has also worked in large conglomerates like EV Birla Group, Chambal Fertilizers, or WIRC Group. By professional, he is a cost accountant by training and alumni of IIM Ahmedabad. He has been declared consistently for 3 years as a role of honor for CFO 100 for exceptional caliber and contribution to the world of finance by CFO India. He has also been awarded as the best CFO with exemplary all-round performance 2018 in Asia CFO Excellence Award presented by CMO Asia on 1st August in 2018 in Singapore. Welcome, Mr. Datta-ji, to this particular conference. Now I give brief introduction of our distinguished another speaker who is spearheading as a CFO of Adani Power Limited. He has been working and having experience of more than 33 years in the field of treasury, banking, financing, and at SR All, he was heading as a CFO earlier. In his SR All, he was responsible for overall finance operations involving project finance, forex, commodity, risk management, cash flow management, treasury management, borrowing. So both these distinguished panelists are from industry. They have successfully completed and converted and approved and issued the audited financial statements even during COVID-19 environment. Along with us, we are fortunate to have Shri Khushroo Panthaky. He is a senior partner with Wockhardt & Company LLP, which is an accounting and consulting firm, and he heads the Western region of firm as its territory senior partner. He is involved in some of the key strategic initiatives of the firm and also heads the banking and financial service industry vertical, besides being a senior audit partner. Mr. Khushroo has extensive experience both locally and internationally in auditing and advising large corporations and multinationals. He is having a more than 20 years of experience specializing in BFSI, particularly in banking and insurance industry verticals, and has audited very large companies in India and overseas. He is a visiting faculty in many training and management institutions. He has come to Ahmedabad, visited for so many times. Wherever we want him, he's always there to give his knowledge and experience. With this brief introduction, I welcome the distinguished faculties to this particular conference. Dear friends, I think today we are sitting in where the third lockdown has been started by Prime Minister of India. And there are a lot of companies which has declared the result. However, if anybody asks me question that how to do audit here, it is really a very, very difficult situations. It is difficult to even go out of my home. Then how can I do audit by sitting in the home? And where the issues are very high, where because of the coronavirus situations, there is a lot of stress on the going concern, stress on implement testing, and a lot of other issues are involved here. So with the objective to understand and explain how can we do audit effectively and which are the issues and challenges which are being faced here by the accountant and auditors during these COVID situations, we are having these panel discussions. The panelists are, as I rightly pointed out, that both are the CFO of the leading companies and they have experience of dealing with very large verticals across the globe. Also, we have auditor who is also going to share his real experience. Before we start a panel discussion, I would like to draw attention to the readers that ICAI has issued a technical guide for providing the accounting consideration which is required to be done while finalizing financial statement. Plus, just a couple of days back, last week, ICAI again issued that you can also sign with electronic signatures. So let us understand which are the particular issues are there when we do audit of the financial statements. Before I come out with the questions, I request the panelists to provide their insights and the way and how they have taken these particular things and how they are able to be successful in ensuring that the financial statements are issued in this COVID-19 environment. To start with, I request Manas Datta-ji, who is a Group CFO of Wockhardt Limited, and he's a Group CFO heading the various verticals across the world. So I request Manas-ji to share his experience, which can be helpful to and useful to all the viewers. Over to Manas-ji.
Thank you, Chintan, and thank you, everybody. It's sincerely my honor. You have arranged for us such a nice webinar today, and which is very, very important, both professionally as well as a part of the Indian economic, spearheading the economic situation today. So, of course, the very first thing is that my views of in this particular scenario, in this particular webinar, cannot be of the auditors. I'm an auditee.
Yeah.
So naturally, please pardon me for in case if I have any mistake in saying something, that views will be certainly for not for the auditors, but for the auditee. But okay, I do appreciate the concerns which are raised, particularly at the beginning of this session. To me, I would like to put this entire situation in two different buckets. One, definitely as an economic forum, as a country, as an industry, globally, what is happening is something none of us and probably none of our parents have seen. I am told that in last 300 years in this world, it was nothing called such a pandemic where few million people are already dying. So we have not seen it. So naturally, I call my guru, who is Albert Einstein, the physicist of a greater wisdom, said that in case we have to resolve certain issues which we created in a particular manner, cannot be resolved by the process of thinking we had while we created. Now, I'm not very sure that this pandemic was a man-made or pandemic has just happened. But what has happened is something very, very significantly different than what we have seen so far. So one is economically, my feel it will be a multi-quarter, multi-dimensional, multi-geographic, and it needs a lot of time to really get back into what we can say is a new normal or probably a normal. On the other side is the present work at hand, which we are all talking about here, which is predominantly reporting, predominantly getting into the financials in place, making sure that all our actions quickly come into the right forum in right manner within the periphery of law, within the periphery of the guidances that has been given by Institute of Chartered Accountants, SEBI, Company Law Board, RBI, and so on and so forth. If I may put that particular bucket right now as an interest of our discussion today, four things comes into my mind. One is, of course, as an auditor, one has to look at on certain valuation models. Those valuation models can be checked and again re-evaluated, particularly for the goodwill, particularly for the investment impairments, particularly for the fair values, the lease accounting, hedge accounting, and so on and so forth, which are very critical, which are creating an issue on the going concern of many of the companies, many of the industries. So as an auditor, I think one challenge will remain in that lane. Second challenge is more operational, which is like some of the uncontrollable events, some of the, not so much unidentifiable liabilities like material adverse conditionalities, certain contingent liabilities, certain contractual obligations, which might come up for while auditor and auditee is sitting across the table. Third part, which is very important for me, is that any kind of a force majeure that is coming into the play, whether it is impacting any of the issues, that needs to be evaluated. And lastly, while we are evaluating these going concerns, these fair values, the goodwill, probably the deferred tax assets, one part needs to be also very, very important, is that a normal process of audit may not help us anymore, particularly in the next few weeks or next few quarters. Technology will help us, particularly getting into the place where we need to, and that technology will be speaking how it can help in the stock verification, how it can help us in the balance confirmations, the reconciliations process, the sampling processes. I think those are more operational and technology can help us. While the first 2 points are probably more managerial, more I think leadership level evaluation, but the other processes will be operational, which we can discuss as the time progresses. I will not take much time. There are people who can talk about it in a much better manner and scope. So leave it to you, Chintan, once again. Thank you very much.
Thank you so much, Manasji. I think the point which I drive here is very critical, use of technology. And also talking about how can we use the technology for inventory, balance confirmation, and other processes. As we come to the panel discussion and question answer, I will specifically address these questions to you and to understand that how can we really use technology in this situation. Now, coming back to Sureshji, he has been having a huge experience of dealing in various locations across India, and they have really come out with the audited financials in no time. So I request Sureshji to throw upon his view how it's possible, where we all are thinking that how it's possible to really come out the home, and you both have really done victory by way of releasing the financials in these situations. Sureshji, over to you.
Thanks, Chintan. Thanks a lot for the kind invitation. And my thanks to Financial also. I think this is the most appropriate time of holding this webinar, where most of the companies are in the process of finalizing their accounts, both from a company perspective as well as from auditor's perspective. So I'll actually confine my discussion, today's discussion, only to share our experience during the closing of our closing of our accounts under COVID-19 situation, and share the real experience. Little longer, but I'm sure this will help to all the audience. So friends, the COVID-19 pandemic is a war against humanity. We all know the corona warriors like doctors, nurses, policemen, sanitation workers, bankers, all are fighting the war from the front lines. But do you think that you are not contributing in this fight? We are also soldiers in this war and fighting the pandemic by staying home as a part of government guidelines and preventing to spread the COVID-19 further. All war ends, and so will this one, sooner than later. This period of isolation reminds me of good old days when I was a CA student. And we used to be in self-confinement. Most of the fellow who are on this web seminar, they all must have confined themselves during preparation of exams and keeping social distancing voluntarily, so that they are successful in passing out the CA exams and can positively contribute in the economic development of the nations. Today's circumstances also point out at the same formula or mantra: to win, stay home. Following the rules strictly is the call of the hour, and I'm sure all of you are abiding by it. However, just like all clouds having a silver line, even this crisis provides us with some rare opportunities. On a personal front, we all have had the chance to stay with the family and spend some quality time with them and relieving our aspirations, hobbies, which we could not be pursued due to lack of time. The other opportunities to the work front, the other opportunity is to work effectively from home and made us learn new communication tools like MS Teams, Blue Jeans, Zooms, etc. We all know the issue of work from home is being debated in India for some time, especially in metro cities like Mumbai, Delhi, Bangalore, where commuting from home to offices takes more time. This crisis has expedited all trials of work from home and made it the norms. The announcement of Adani Power Limited audited results for financial year 19-20 on 27th April 2020 is a live example of effectiveness of work from home. Now let me tell you how we implemented work from home and our experience to the benefit of all. As a part of good governance, we announced our annual schedule of board meetings and AGMs in advance. According to that schedule, the board meetings of fourth quarter of FY20 was to be held on 9th May 2020. This is another 5 days to go. And we all know the SEBI has extended the last date of Q4 board meetings from 30th May to 30th June in view of lockdown. Our promoters, inspired us to make more effective use of this lockdown period and advance the board meeting date rather postponing it. So we follow various robust processes for our monthly and quarterly closings. That's our general practice. And we treat quarterly closing like annual closing. This is very important SOP which we follow every quarter. All audit issues and observations that come during quarterly audits are logged and followed during the same quarter or in the following quarter. Therefore, we have decided on 1st April to work towards preponement of our board meeting and utilize the time period, and accordingly formed up the board meeting date on 27th of April. We started daily calls with our finance and accounts team, daily call, 10 o'clock, across all the various locations with the audit teams, all open issues, audit pending items, and any technology connectivity issues. Our IT team provided very important things. Our IT team provided a continuous support to fulfill our objectives, including SAP-related issues on priority. Document verifications, balance confirmations, or other challenges we faced during the lockdown. This was addressed through dedicated efforts, and confirmations were provided in a timely manner from all counterparties on emails as an alternative to physical balance confirmation. We also completed physical verification of property, plant and equipment as per the regular cycle. As we have been regular in physical verification of assets, very important, this regularity of physical verification has paid us a lot, and we have not seen any significant deviation during the closing. We were able to achieve above with dedicated team efforts, not only from finance and accounts, very important, but also from all operation, maintenance, on-site management, and all critical departments like procurement, logistics, regulatory affairs team, etc. All this was done while working from home. This is a show of our harmonious teamwork. One of the major issues which we have faced during this audit is the force majeure clause. I should share with you, while power company comes under the essential services, and we have been mandated by the government to provide the power 24/7. Hence, despite getting the show cause notices, the Ministry of Power has later clarified that no, this circumstances for power is not a forced measure. So I think there the auditors got some comfort, and they have clearly told that whatever amount which is payable because of the availability of plant will be paid to these power companies. So this was one of the most critical things which we have encountered during the audit. And I'm happy to note that our statutory auditors also stood up to the challenges despite the lockdown. The team of the statutory auditors were also spread out at various locations in the country. We have given access rights of our SAP system without compromising on our IT security so that they can conduct the audit process smoothly. I must appreciate the auditor, SRBC, who fully supported and completed the audit work without compromising for required data, details, or information to achieve this target. We used electronic platform extensively during this lockdown period. Our audit committee and board meetings were accomplished using online collaboration and video conferencing tools like BlueJeans and Microsoft Teams. Our effective use of SAP platform also helped us to achieve this in a timely manner. It must be very pertinent to note that maintaining IT system uptimes and fast connectivity during this lockdown period was a very difficult job on one hand and savior on the other hand. Lastly, I'm thankful to all my team members and colleagues who directly and indirectly helped to achieve this milestone. That's a real experience which I have shared with you. And of course, any more things which they would like to know, we'll certainly share our views. Thanks a lot.
Thank you, Suresh, for sharing your experience. SEBI has given relaxation of submitting result from 15th May to 30th June. And the company has preponed the board meeting and it's completed and achieved. I think credit goes to you, the whole team, the entire audit committee, auditors, everybody working together. And in that case, I think the way you explain is giving a lot of nitty-gritties of how it has been managed on daily basis, how the review has been taken place, and how as a team we can ensure that the audit can be completed within timelines. I think this has been one of the very few critical things which are important for us to understand. Now moving to Khushroo, because if you look at the panels, we have two panels from industry and one from auditor. And the statement or the webinar topic is audit and financial statements. Obviously, we are looking for the auditors aspect, how they have faced and how they have given their support to us. But I think the role of the Khushroo here is very critical. And we all are here to eagerly know how, Khushroo, you are able to really complete the audit, because he has been handling audit of very large size companies and he has completed it. So we are eager to know and understand from you, Khushroo, what you have done, how we should do it. And I'm also looking specifically for how SMP can also learn and implement this system in their office, that they are also able to catch up with this requirement.
Thank you, Chintan, and my sincere thanks to you as well as all the office bearers of Ahmedabad branch for giving me this opportunity. As I keep saying always, for me, Ahmedabad is a homecoming, and indeed very obliged. If you recall some of the earlier days of audit, and I'm sure Manas and Suresh, both of them would relate to what I'm saying at the outset, that there has been this particular tendency that yes, as an auditor, you need to be at the client's place. So in fact, we push people when they are actually in our office that why don't you go and work from the client's offices? And that is exactly what, you know, the theme has been until I would say 20th March 2020. Auditors are always very used to working at the client's offices. But then came a sudden U-turn where nobody could step into the client's premises. And I would definitely advise people not to step into client's premises unless and until this particular lockdown is complete and things are safe. And therefore, this particular virtual world became very, very important, not only to the clients, but also to the auditors. Never ever anybody, even 2 months before, even in the month of January or February, would have imagined that how we would have done the audit under these circumstances. But believe me, trust me, contrary to my own expectations and beliefs, where I initially felt that since the government has given that extension of 1 month for financial reportings to be extended, when I started to talk to clients, the clients actually said very clearly that we are committed to our timelines. We believe that we will be able to turn it around, and we look forward to your support and cooperation. So without coming under any pressure, I said, let me sort of, you know, give myself also an opportunity to see whether we can complete the work based on the timelines that they had given. In many cases, we can. In some cases, we said very clearly that it may not be possible, and therefore you need to defer it by a week or 10 days, etc. And they actually looked into it, and then they extended that particular timeline. So I must say that, you know, the virtual world is also becoming a real world. The time that you have been saving in terms of not traveling to clients' offices in a place like Mumbai or any other large city, you may spend about 2.5 to 3 hours minimum going and coming back from the client offices. You can use that very fruitfully. Is the virtual world very different? I don't think so. Today, you have the best of technology. Yes, there were challenges. And I'm sure everybody has faced that challenge in terms of, you know, the internet not working or bandwidth not being there or many other things that could have not worked. But to be very honest, I think where there is a will, there is a way. And my experience also has been that couple of my clients, and you'll be very surprised, couple of my clients who are large financial service clients actually turned around the information 3 or 4 days before the committed timelines. And that gave us a little more time to work on this. So coming to actually what has been the experience, I must say the experience has been good. It's definitely the learning at the same time. And somebody alluded at the beginning itself that, you know, it's the new normal. Chintan, you only mentioned that it's a new normal. We have to start thinking on these lines, because in the future, we need to be geared up in terms of having a plan B and a plan C in place. God forbid if something goes wrong. We do not wish that. But at the same time, as an auditor, I always believe that wherever there is a problem, there should be also a solution within the standards. So now let us look at the opportunities that the auditors would also have in this particular environment in terms of the new learnings for them, and what is it that they could have done otherwise, and what is it that they have done better under the current circumstances. I would also like to allude upon the fact that people should not be carried away thinking that because of the fact that this is an offline audit, this is basically an audit where alternate procedures will be substantially carried out. And therefore, you know, it does not matter whether I am 100% getting comfort on the audit or not. I think that mindset is very, very dangerous. Nowhere in the standards, nowhere the government has said very clearly, or nowhere the institute or anybody has said that we will allow any kind of a lenient approach in the audit. It's not going to be that. You have to carry out your procedures the way you have been doing. You have to have alternate procedures also strengthened in a manner where you get the comfort, and you need to come to the conclusions for which the bases have to be there, and such bases need to be documented as well. Internal controls is something that, we are required to, to be very honest, I personally believe that when it is a case of a listed company audit, the work goes around throughout the year. It's not just a limited review. You also carry out the interim audits, and your control testing in terms of reporting on the internal financial controls has to be carried out during the year. So if people have been sitting till the end of month of March or February, and if at all they have not done, that is something which, is a matter of concern. So internal control testing, if it is already being done, the first question that the auditor would have is that under the current COVID scenario, whether the company, for whatever reasons, have tweaked the controls or have substantially changed the controls. Some of the technology controls could have been changed because of the fact that the remote access has to be given, offline access has to be given. Some people would have been given more authorizations to work from home to get into the systems. And this is something, the most important thing, IT environment, in terms of changed IT environment, need to be assessed by the auditors. And therefore, they need to get into that questioning mode, and sometimes even into the examination mode as to whether those controls are properly designed and whether they are operating effectively, because IT is the backbone of the financial reporting system. In terms of alternate procedures, which I have been dwelling upon, I must say that you should think about, first of all, the normal procedures. Do not jump into alternate procedures. Where it is possible to carry out normal procedures, despite the fact that there is a situation, please carry out the normal procedures. Where you believe that the comfort is not there from the normal procedures, what could be the alternate procedures? Would they be equally robust, less robust? Use your professional skepticism, use your judgment, and you come to that particular conclusion basis many considerations, including materiality. Scope limitation is something that no auditor would want to live. For example, if it is really not possible for the auditor to get any comfort on inventory verification. Now today, with the technology available, if the client has performed an inventory count, the auditor is required to observe that inventory count. The auditor is not required to go back and again do an inventory count. But if the auditor is completely convinced with the kind of count the company has done, the management has done, if at all it can be captured on the Zoom, if it can be sort of, proven in terms of any other alternate evidence, the auditor should take cognizance of that particular fact. But if for whatever reason, if this process is not followed, then there is definitely a scope limitation, and the auditor has to come out and report that scope limitation very clearly, assess the impact of the scope limitation basis, the materiality and the pervasiveness, and accordingly report in the audit report as such. Infrastructure, yes, today we all have some problems or the other in terms of infrastructure at home, etc. But very, very important for the partners, for the people who are working in the managerial capacity in the professional firms, may not be very easy to review the financial statements online, and therefore maybe seek support from your friends, seek support from your neighbors. If you do not have a printer at home, please get the print done of the financial statements and make sure that you review, because as I said earlier, the fact that you may not be able to do an effective review on the laptop or on your computer does not mean that you will be absolved from that particular negligence. Inquiries and meetings definitely have gone up. I must say that, on an average, if at all a professional is used to working 10 to 12 hours a day, now from home, the working has gone up. And there is nothing like a Saturday and Sunday anymore into the audit profession otherwise as well. And therefore, make sure that you are very well connected, not only just to the CFO, but all the important process owners. Most important thing that I would request our brethren over here in the fraternity is to make sure that you carry out an impact of COVID by understanding, you try to assess the impact of COVID on the company by sitting down with the relevant people and trying to see where it has impacted the processes, where it has impacted the systems. And then when you sit down with the CFO or with people down the line, try to understand the line by line impact. For example, it could be impacting the materiality. It could be impacting the inventory. It could be impacting the receivables. It could be impacting the expenses. Some of the expenses have gone up. Some of the expenses have gone down. It could be impacting the claims. It could be a lot of other things. It could be impacting the investments, given the fact that there is always a market volatility as of 31st March. Also created by COVID, the markets have gone down, and therefore such impact needs to be assessed by the auditors. To what extent it is an extraordinary impact, to what extent it is an exceptional impact, to what extent it is a normal impact, is again a matter of professional judgment and professional skepticism of the auditor. I would also say that look at some of the disclosures given in other financial statements, the audit reports of which have been released. You will at least get some idea in terms of how the other auditors have reported, how the management has reported. Very, very important is that client himself or herself should be in a position to make an impact assessment and accordingly disclose a very detailed note in the financial statements and in the LODR results as well as to what is the impact of COVID on the financial reporting. Another point which I would like to iterate upon is the fact that people should not be getting carried away in terms of the fact that, yes, there has to be a para of emphasis. I would completely disagree with that approach if a firm has that particular approach, because that is not the right way of looking at it. You need to assess on a case-to-case basis, depending upon the industry that you are auditing, depending upon the company that you are auditing, depending upon the kind of procedures that you have been able to satisfactorily carry out, depending upon the assessment the client has made of COVID, and accordingly come to a conclusion that whether that particular assessment made by the client is sufficient, not to warrant any disclosure in the audit report or in the limited review report, or to warrant some kind of a disclosure in the report. And this is basically, again, a matter of professional judgment. So I keep on repeating this particular word, professional judgment, again and again, because under these circumstances, it is very important for the auditor to use his skepticism to come to the right judgment, to have a balanced view, keeping in mind the risks on the audit, and at the same time, the interests of the client in terms of the right financial reporting. Wherever, my view also is that sometimes, companies in India are very, very large companies and they have a global presence. They are Indian conglomerates. I must say with a lot of pride and confidence that when we audit the holding company when a professional will audit the holding company in India, he may not have much of a problem because the timelines are committed. Fortunately, the impact of COVID is not much on India compared to the other countries. But if at all you look at geographies like the UK, the US, the Europe, and some of the other countries in the Middle East or Far East, etc., those geographies are impacted. So when it comes to consolidation of audit, it may not be necessary always that everybody will be reporting on time. So wherever the other auditors or component auditors are not reporting on time, you need to go and tell the client very clearly that we need more time. I think at any point of time, and this is my humble suggestion to the professionals, at any point of time, with due respect, I know that there are two CFOs sitting over here, do not come under any pressure from the management or from the audit committee or from the CFO. The government has actually extended this by 30 days in terms of the audit to be completed compared to 30th May, which was there earlier. And therefore, if the company is not ready in terms of standalone financial statements or consolidated financial statements, there is no need to hurry. There is always that month available. And this important message I wanted to convey very, very clearly, that do not come under any pressure unless and until you believe that all your work has been done. At the same time, as I keep mentioning, technology is of great help. The learnings out of this particular COVID is the fact that you need to have a good infrastructure at home. The clients also will start thinking about what extra technology, what other technology we need to inbuild into our own systems, so that in the event that such a situation, God forbid, arises in the future, how well, effectively, and how well will they be able to cope up to actually meet the kind of difficult times that one may go through again in the future. This would never have been expected in the past, but I think let us be ready in the event that something goes wrong again. We should not be taken by shock. So I just thought that this was basically a little update in terms of how an auditor should function under the current environment. Thank you.
Thank you so much, Mr. Khushroo, for sharing your experience. I think that is what the way you've done the audit of large conglomerates, large corporates, even by sitting at home, everyday discussion with the top management to understand which area is being impacted, doing assessment of COVID-19 on various area, and then coming out with the end to ensure that whether the auditor need to give emphasis on the matter or not. I think this whole process is very complex. It requires a lot of judgment, which is rightly pointed by you, that auditor has to really apply his judgment about everything. Now, we have received many queries and issues of practical issues of doing audit in this COVID-19 environment. And I am going to take the benefit of this expert panelist to really address the issues which are rightly raised by my members. To start with, so what I can do that we have three panels. So instead of having to and fro more, I can start with first Manasji, then Sureshji, and then Khushrooji. So first question to Manasji. I have received, I think the repeated question which I have received is about inventory verification. everybody is facing a lot of issues that they are unable to verify inventory, and particularly in the companies where the inventory is very critical. I think in Wockhardt, the inventory has been one of the most important line item in the balance sheet. So in such situations, how can inventory be verified? I heard that few said that with the video conferencing, with the use of videos, you can verify inventory. But how far it is feasible, how it's possible, and how it can be getting the auditor can get the basic comfort on the inventory verifications.
Okay, thank you, Chintan, for that question. Question is simple, answer is difficult. The question is that one direct process will be difficult to get into a solution of an inventory verification. I tell you a kind of an complexity which we have faced. We have presence of manufacturing in US, UK, Ireland, Dubai, and many other places. And about 21 countries where we have a direct presence on where the inventories are directly held by the company, including India. Even in India, there are only the manufacturing location is about 9. So if one has to get into a hold of the number on 31st of March, I really don't think that only a technology will help. What we did, I'm going to share with you, but it also comes with a robustness of your IT platform, robustness of whatever ERP platform one uses. Like for us, we use, and I don't want to claim the name of the ERP platform for only for a sake of commercial sensitivity, but we use a ERP platform for more than 14 years now. That's a stabilized one, and not only we use the ERP platform for a transaction management, we use its data layers, we use the data warehouses, the objectives, the consolidation process, and the control and planning processes in the ERP. So as an auditee, which we placed the data month by month, quarter by quarter to the auditors, that how my inventory moved over a period of time, coming so that there is a robustness of capturing the data and how it moved over a period of time. This is point number one. Point number two, we used certain videographies, again for a commercial sensitivity and not to be imprudent on this for any of the other service providers. I'm not naming the platform which we used, but we used a platform where my financial controllers, my plant heads, my plant operating heads, both operation as well as the quality control and the stores, they gone to the warehouses where the materials, both consumables, the stores and spares, the inventories in WIP, inventories in finished goods or semi-finished goods, we have shown them on a videography which has not only been live, also captured like the way we are capturing this particular webinar, so that there is a record available with a time stamp, with a date stamp available. So wherever RFIDs were available, we use them from US to UK to Ireland to India and many places. And you can think through that majority of the places our auditors are in top 5 of the large international firms. So they also have their own processes of validation. So one is a technology in terms of capturing live the data in the various places we are holding. Point number two, how that data moved month by month, period by period, cross-checking with the inventories that we are holding, cross-checking with all the paraphernalia of internal control, IFC testing like in India, so is in UK, so is in US and Ireland, and so on and so forth. To be very, very clear, I'm getting into the board meeting next week. To that extent I can share is we are through with the audit process of inventory without any major, any hassle. Okay, sometime we did face a connectivity issue, particularly in the warehouse when you are deep inside the bins, deep inside the silos, there are connectivity issues. So we at that time, we captured offline the data and uploaded them in case if there was a connectivity and a visibility issue. So this is the way. And also in some cases, in case which is not technically possible to videograph. We have used, like I told you, the RFIDs. We have used the technology of the digital photography with all the numbers in the bins, in the racks presented, so that again with the date and time stamp, so that we used it. Even for uploading that data into an FTP file, we also use certain kind of a validation, so that for the auditors, it is also clear that the data is not sanitized, data is as nascent as it was captured without any kind of a change in between. So the validity is formidable. So that's what is, I think, my answer to your simple question. And the question to a global organization which is headquartered in India and controlling the operation in so many places in this country. And let us not forget that my India business is only 40% of my total operational revenue. So my 60% of revenue comes outside India. So, and they are different auditors. India is a different auditors. So there are complexities, but hopefully this year, these are all taken care.
Thank you so much, Manasji, for sharing your experience of getting the inventory verified by the auditor. As I understand that, I think the first primary thing for anybody is to look at the first system. So if the auditors have already done audit of that particular company during the year, they are also already conversant with the system. So once they have aware about system, they completely know which are the loopholes, because control testing is part of the audit procedure. So once the control testing is done, then this procedure can be done through the use of video conferencing. And it's really surprising to see that you have been using videos conferencing video facility with the time and stamp. So it is also good for auditors as a documentation. Now moving to the next question. Again, this is a very important question received from various participants about balance confirmation. After Satyam and other cases which are happening in the country and the world, the confirmation of balance from the related parties, suppliers, customers, banks, leading institutions is very critical. Now, in these situations where the particular supplier may not be traceable, or it is difficult to get the confirmation in the physical form, somebody is not traceable. So in that case, as an auditor, how can I get the satisfaction of the balance confirmation, and how the company can help and support auditor by providing the evidences of balance confirmations? Suresh, can you just please throw light on the particular issues on these and how you resolve that issue?
Sure, Chintan. I think this is one of the, again, very important process, and especially this is the Q4 audit and the closing audit, where auditors will certainly insist for a balance confirmation, whether it is a supplier, customers, related party, or banks, and they will not compromise without getting the confirmation. Like I said earlier, that we have actually meticulously planned various activities which is to perform internally. This is one activity which is not in our control, basically. This is basically the external factor where we need their cooperation also, especially the suppliers, customers, and bankers, basically. So we realize task force basically. So generally, when we talk about balance confirmations, we have a two process for annual closing. One is that management takes confirmations for book closure. There's a very general practice. And one is the direct confirmation, which is being sought by the auditors directly from the banks and suppliers. Yeah. For management confirmation, this time we have shared confirmation requests through emails, because all we know that sending the in physical form was not possible. And these emails were sent to all the counterparties, including banks, lenders, suppliers. And we all know that while the banks were working, but they were working with a limited staff. And you rightly pointed out the Satyam case, which actually provides 100% confirmation from the banks, is very critical. So getting 100% confirmation from banks and that too within time when we have made our plans to close 27 was a very challenging task. Let me share with you. So what we have done, we have actually made a task force of our team. We have 6 power plant basically. And I can tell you these numbers are running in 3 digits. So we made a task force, and every task force was given a mandate to chase with the bank with a special request giving a rationale. And let me share with you, we religiously followed with the counterparties, including supplier banks, religiously. They have actually replied directly to statutory auditors. So what are the, rather than replying to us, they replied to directly statutory auditors through emails basically. That completes the audit process as far as the statutory auditors are concerned. And there was no material difference between the confirmation and the books. So we could actually complete this process very smoothly. All of us know that we have access to our own system, and where people are working from home and they are having their own system who can access that. So this responses through emails provided a complete documentations to the auditors about the confirmations. So that's how basically we achieved the entire confirmation process to the satisfaction of the auditors without compromising anything. Let me say, if any firm, is facing any difficulty in getting confirmation, then I think the auditor may rely on the past experience. Very, very important. So that's your track record also really works here. So they can really see the past experience and judgments about balances as a reporting date. That's very important. For example, in the last quarter, let's say December, if confirmation was received, then auditor can actually need to check additional repayments only to verify the closing balance as on 31st March. That's how, even in case some of the balance is not able to receive, this is the alternate check they can do. So that's how we were able to complete the entire processes for getting the confirmation. Thank you.
Thank you so much, Suresh. I think the most critical aspect is one, that we need to look at the past history. If the balance confirmation received in the December quarter, during September quarter, that will give us additional evidence. Plus, rigorous follow-up, if it is done, then it's definitely possible, because everybody may not be able to attend the office. However, anybody can work from home. So I think the rigorous follow-up will definitely certainly help us to get the confirmation, and that should be done. Now, coming to the next question to Khushroo ji. Khushroo ji, I think you have been kept especially last, because the both industry experts, when they say that at the end, if I have any question, I have any doubt, then I know that Master Blaster is sitting at the last. So any question I have, I can throw upon you, and you will be there to really hit the sixer, right? So the question right now for you as auditor, when I talk in Manasji, he talked about the situation that inventory verification is to be done in this fashion under video conferencing. When I talk with Suresh, he says that balance confirmation can be done. If I'm the auditor of the company where the inventory verification doesn't have that system, and or I'm the company where auditor, the company is not able to provide me by auditor, what will be impact when I sign my audit report? You talk about the emphasis matter, you talk about the basically qualified opinion. So in which situation I have to qualify or I have to give emphasis matter? Because when I look at few companies, a listed company, they have given the matter of inventory verification not done as an emphasis matter. However, I think it is judgment. So in which cases the auditor should resort to the auditor's report for giving emphasis matter or qualified report?
So Chintan, let me explain a little more generically, and of course I can come to the inventory aspect later. So when I talk about emphasis of matter is generally for specific aspects where there is a particular disclosure given in the financial statements, and the auditor would like to emphasize on that particular disclosure. So scope limitation is not being there in the financial statements because the client cannot talk about, or the company cannot talk about, any scope limitation per se. So if you refer to 706, which is talking about the emphasis of matter, that particular para, which is there in the audit report, refers to a particular note where there can be any uncertainty. It can be a material uncertainty, or it can be a uncertainty which could be causing on account of various other aspects. Now, when I say about scope limitation, as I said earlier in my initial remarks, that you need to consider as an auditor the understanding of the client systems, the client's control, and how the client is functioning in the current environment. You need to also understand from the company its assessment of the impact of COVID on a line-by-line basis, or at least for material components which are forming part of financial reporting, like receivables, like inventory, like other things, etc. And if at all you are convinced about the fact that the future impact of this is not very materially, for example, there are different conditions and there are different industry segments. So for example, today, if at all you look at financial services institutions, definitely there can be some uncertainty in terms of the recoverable of loans and advances that they would have given to the borrowers. If you look at the hotel industry or the tourism and travel industry, or maybe the airline industry, then you are not very, very sure in terms of what the future cash flows will be. But wherever possible, in those industry segments where COVID assessment has been completed, and it is not going to be causing any kind of a material uncertainty in relation to the future of the company or in relation to the going concern of the company, and if that is being properly assessed by the management, and if the auditor has understood that particular assessment and has been completely convinced based on his professional judgment and skepticism, the auditor should make sure that it is being appropriately disclosed in the financial statements. And if that is being appropriately disclosed in the financial statements, and if he is convinced, it is fine. Now, I may be just saying this in terms of the fact that it's very easy for me to say. But yes, that is an assessment which the auditor has to make, and that is a very important qualitative assessment. So even within the firms, you need to talk to your other partners, you need to talk to your technical groups, you need to talk to other people where you believe that you may not have another audit partner in the firm. And to make that particular qualitative assessment, you need to document your basis of that qualitative assessment. But wherever you believe that the future is uncertain, it may not be just impacting the going concern, but the future is completely uncertain. It is really not possible to understand the impact at this point of time. But maybe as of 30th June or as of 30th September, it may be possible for the company to assess, yes, what could be the impact. And therefore, if at all you are not clear what the future impact is going to be, if the impact is going to be material but not very pervasive or whatever, then you can think about going that appropriate disclosure on that particular uncertainty into the audit report. However, you need to assess that again very, very well, because as I keep saying, certain industry segments, that particular para of emphasis is very, very important because you are not sure about the impact. But wherever it is not required, having done that particular assessment, and the fact that, of course, if at all there is an impact and if it is not very material, it is fine. When you talk about a going concern, you need to ensure that whether the company continues to be in existence a year down the line. So when you are signing off the financial statements of 31st March 2020, and you are talking about a going concern, you need to see whether the company will continue to be a going concern as of 31st March 21. So even if at all I have to relate something, for example, if a company is a 200 crore company in terms of top line with a 40 crore profit, as a matter of example, the cash flows of the future projections made by the company management says that, okay, I'm going to be a 100 crore company next year, and I may be having a profit of 5 crore. If that particular company has a reserve of more than 800 crores or 1000 crores, I know for very sure that, it's not going to impact the going concern of the company. So why should I be insisting on a para of emphasis or any kind of a disclosure in the audit report? So each industry, each specific case, a set of circumstances applicable to a particular industry, they all need to come together. They all need to be assessed. They all need to be understood. And basis that, the auditor needs to make a qualitative assessment. And I keep making this particular statement qualitative assessment and not just the quantitative assessment. Having those representations from the management may help, but those representations may not absolve the auditor of not having done an independent qualitative assessment. So if the auditor is convinced of those considerations, he makes a proper documentation of the rationale, and accordingly, he would make that judgment of not going with a para of emphasis or otherwise with a para of emphasis.
Fine. Thank you so much, Khushroo ji. I think that gives us a lot of importance. That first thing is that giving emphasis matter is not basically, in case it is not something, it is a standard procedure. You need to assess and look at the company, its impact and materiality on the stakeholders in the decision making. So if it is material, then only you should make emphasis matter or qualified opinion. So whether to make qualified opinion or emphasis matter it is based on the company to company, it's different. It is based on the materiality and its impact on financial statements. Now, coming back to the next round of the questions to Manasji, contracts in these situations are where there are certain cases the contracts are being modified. For example, the company is having the lease rental and the company is not being able to use that offices for a particular period of time. So lease landlord, we go and say that let us modify the contract. Or there are a lot of other contracts like dealership contracts, they can be modified. So which are the different kinds of contract modifications which are happening in industry and how these are impacting the financial statements?
Well, that's an interesting question, Chintan, for sure. Contractual obligations today is getting into a very, very severity, right? And the severity cannot be called because it is only by an wishes and the something of the whims of the both the parties. It's because of the compulsion of the situation. There can be a scenario when the supply cannot be made, but we have a supply side contractual obligation to the party. And in that particular case, there can be a penalty in the future. Now, on the other side, there can be an issue that a supplier, which is in some other country, like in my case, there are imports available, right? And some countries which are under COVID-19, or even if they are not under the COVID-19 scenario, but there are no way I can bring in the products from those countries to India, because the Indian borders are, as of now, closed for any kind of an import from that particular territory. So there will be certainly an issue where the criticality of the contractual obligation needs to be evaluated, both the supply side for ourselves as a seller as well as the buyer. I know that there will be in future, there will be a lot of issues on this, and there can be both commercial as well as penalty coming in, particularly for the international places, particularly for the government contracts where you have a legal obligation of delivering goods. Of course, the one part is important for a company like us, which is in the essential services and essential product manufacturers. There are certain leeways because of the situation that various governmental authorities can understand and can appreciate. Also, I have seen in the cases where both the supplier and the consumer, they have got into an understanding that, okay, even if there is a 1 quarter failure of a contractual obligation, that can be fulfilled for the next quarter because of the situation which is beyond our control, or in our technical term, you can call it maybe a force majeure, maybe a material adverse condition, right? As an auditor, yes, one has to get through that process. What we have done is that we have got some kind of a confirmation from those parties, both suppliers and the vendors, is that they are agreeable in case we supply them over a period of time of our unfulfilled supplies for whatsoever reason. They are okay. So as an auditor, there can be an issues which is settled. But in terms of where there are supplies not delivered to us for whatsoever reason, there will be a production losses. And unfortunately, in this world, hardly any time the raw material or the supply side production defaults and get into a loss of profit insurance claim. So there will be issues in future. So what we have done is that we have taken a cognizant call and at that particular point of time with the auditors and taken a view that what we should be doing in terms of a probable claim on them, or we have decided, this is a commercial call. I cannot really discuss it in the public forum, but we have taken a call what we should be doing with our long-term suppliers, what we'll be doing with short-term suppliers and on the SMEs and MSMEs particularly. So accordingly, we have taken an action.
Thank you so much, Manas. I think what is needed is that first auditor need to have the list of contracts where the modification has been taken place. From the list of modifications, second step is to look at what is the situation now, what is the future, and what is the step management is taken for that. Is it being like extinguished? It is being cancelled? Is it modified in which fashion? And how it's going to impact the company? So accordingly, I think the decision can be taken. Also, we need to look at the creating a provision for onerous contract, because it's possible that the cost of meeting the contract may exceed the benefit. So that may require the provisioning part for industry. Now moving to the next question for Suresh ji. I think one of the most important thing, we look at the way the COVID-19 has been spread across the region. And since last so many months, there are industries like hospitality, aviation, automobile, retail, media, they have been severely impacted. So in case I am the auditor of that company, and if I have been entrusted with the task to assess the going concern, then how to really assess this going concern assumption from your experience of dealing with these kind of situations of going concern and giving comfort to the auditors in these situations? How can and what should as an auditor or what should as a management look after to see that and assess the going concern?
I think thanks. One very critical questions during this period is the assessment of COVID impact. In fact, most of the time of the partners, senior partners, or even the people in the technical committee of the various audit writers, how to assess the impact of COVID-19 in a particular business, basically. And as you rightly pointed out, you have already told the severe impact. Once there's a severe impact, obviously there will be some consequences. So let me tell you, it's not about the hospitality, travel, or airlines, or let's say any other the company which you have just now told. To my mind, today every company will have an impact due to COVID-19. So I classify this impact into three categories. One is a nominal, which I think they'll be able to cope up in next 3 to 6 months once the lockdown is over. Another is the material. Yes, this is not a short term, it's little mid-term scenario, maybe range from 1 to 3 years. And last and very important, the severe impact. There is a permanent reduction, which will impact the whole business model itself. So very important is that every industry will have a unique this model of assessing. And as you rightly pointed out, that auditor has to assess the impact of COVID-19. Let's say, I think this questions, in fact, has already been dealt with by Mr. Khushroo in detail in his last, the question when he was replying, that every auditor, every management has to assess the impact of COVID-19 going forward for a going concern. Now, for us, basically, what we have assessed, and this we have encountered even in the power also. Let me share with my particular experience. So when we were assessing the COVID-19 impact, what we have realized is that we have used 4M formula. 4M is not formula M, 4M, where we have seen the man, machine, material, and money. What is the position of these 4Ms? With basically the 4 wheels for any business organization. So in terms of manpower, basically both the external, where we have the vendors, we have the contractors, and the service providers, basically. So since most of our service providers, vendors are in the remote places only, so that availability was there. And in fact, over the last so many years, we are one of the major IPP player. We have our own internal capabilities to carry out the maintenance part. So we have well experienced staff. That is one area we have assessed. Yes, we have required manpower, which is first and first. Second is the machine, whether the machines or the plant, because we are coming under essential services, are able to operate during this critical situation. And that's where we critically examine that the required maintenance staff is available, expertise available. We'll be able to handle the machine and keep our plant available 24/7. Third, very important was the material. Is both the raw material. Basically in the power business, our material is coal. And fortunately, Government of India has allowed coal movement very smoothly. They've allowed that this is being essential. They've allowed railway also and the coal. And we were having required inventory also. Last but not the least, the money, which was very critical for us. And this is common for all the business organizations. Whenever you are selling your commodity or your power, whether you'll be able to realize or not. So one of the things we all experience that the DISCOMs are not able to raise bills. We must have seen in our own case, they're not got any electricity bill. And that's where they are not able to collect funds from the public or from the businesses, because businesses are not working. Hence, they are not able to pay. Now, this is actually one of the fundamental things for assessing is the liquidity crisis. Now, this liquidity crisis is a temporary one or is it long term? Fortunately for us, the Reserve Bank of India and the Government of India has come out with a very, very at the right time, the measures whereby they will ensure liquidity. They will actually allow businesses where they are facing liquidity crunch to allow the deferment of interest, deferment of principal repayment. They will allow the COVID-19 loan. The title of the loan itself was COVID-19. They will also allow to reassess the working capital cycle of the businesses. So what we have to see that when we assess the going concern, we have to see is it the normal, material, and severe. Accordingly, the responsibility of the management is to first give the projections that based on the category. Let's say when we are talking about the hospitality or travel, this today is uncertain. We do not know whether it will be after 2 months, 3 months. If you take the example of China, yes, we believe that all the hotels, public places will be open in next, let's say 1 month. Then we believe that this is a very normal. In 3 to 6 months, of course, there will be some reduction in demand, but not going to be a permanent reduction in the demand, basically. So that's where you have to assess the position. And let me tell you, this is not easy. It is very easy to say that we have to assess. It's very difficult to when you put on the numbers. So it requires a thorough planning. And one thing which I think every business organization, they have realized that during this crisis period, when you project the cash flows, this is time when you control your overheads and OPEX also. So while we are seeing the reduction in the demand, you must have, I think, heard that many of the companies have announced the austerity measure. Yes, conserve the cash, and which really help us to ensure the going concern. So keeping this short, every organization, every company, whether even under the travel airlines also, you may have one airlines which will be floating because they have a right, they are not leveraged. There is enough room to get further liquidity. There is some airlines which is fully leveraged, keeping a very limited room. So all the assumptions leading to a supply and demand coupled with your expenses, we have to actually give the financial projections. And that's where the auditor roles comes. He has to actually see every assumption given by the management, he has to see seriously. And then made up his mind. And I agree with Mr. Khushroo, is not that every auditor has to give a EOM. If he believes that it is a normal, he can simply stay away. And based on the severity or based on the materiality, there is comes for EOM and the qualification, basically. And this is basically again an assessment. It is not going to a permanent assessment. Once we move forward, again the June is around the corner. You have another all listed entity has to declare the results, the quarter results. You can really reassess. But being a quarterly closing, it assumes a lot of importance in assessing the going concern. And that's where this is one important element where both management and auditor have to put their efforts to assess the overall situation. Thank you for that.
Chintan, I would like to
please.
just add to what Suresh ji mentioned, and it's a very relevant point that he mentioned. As an auditor, I think, yes, for the auditors, financial year is very, very important. The year end is very, very important because these are the audited financial results. And 95% of the companies, which are listed companies, carry out limited review on a quarterly basis. I mean, the auditors carry out limited review on a quarterly basis. So the heads up again over here for my fraternity and for my brethren over here is that just do not be relaxed as of 30th June and as of 30th September. In terms of deciding whether there should be a para of emphasis or not a para of emphasis. At this point of time, the auditors may not be in the best position to have sufficient and adequate information available with them to decide. And therefore, at that point of time, when they have sufficient information available, they should not shy away from considering to put a para of emphasis or to put any kind of other disclosure in the audit report, given the fact that the impact assessment of COVID would be much more stronger and healthier 3 months or 6 months down the line. So just because that, the company is declaring the limited review results, the auditor should not shy away from that particular responsibility, because either a limited review report or an audit report, they carry equal significance as far as auditing standards are concerned. So that's the point that I was driving, please.
We received, I think, the management formula of going concern assumption, and that's 4M: man, machine, material, and money. I think if these 4M are the wheels of any organization, so one can do assessment of these 4M to understand whether impact is low, medium, or severe. And if the impact is severe, what is the plan? As Ind AS 1 talks about that when you do assessment of going concern, you need to consider at least 12 months from your reporting date. So when you do assessment of 31st March 2020, you need to consider the situation at least after 30th March 2021. And then at that time, we need to do a lot of assumptions, different scenarios, and then we need to arrive at whether the going concern assumption is there or not. And as Khushroo has rightly pointed out, that we need to really consider EOM or qualified, unqualified opinion, not only during this period, also every time we need to reassess the situation based on how COVID-19 is being going on. So now with this, let us move to the next part to Khushroo. I think there is a lot of discussion on this part. During your initial time, you talk about the disclosure requirement under financials, and I received various questions from the practicing CA that when they look at the disclosure of few companies, they found certain companies done disclosure in balance sheet item wise. Few companies has done disclosure only in the notes on accounts, and there is a reference in the auditor's report of emphasis matter. So I have two questions for you. One is that what kind of disclosure is adequate, which talks about this COVID-19 situation in financials? Second, which are the additional information auditor should take from management as a part of MRL can be useful to the auditor in the future?
Chintan, I think you were not very audible as far as questions. I understood, but maybe for the benefit of others, you will have to repeat the questions again, please. I understood exactly what you asked, but maybe for the benefit of others, please.
Sure. There are primarily two questions. First question is about what to be disclosed in notes and accounts and in auditor's report for the corona situations. So what the company has taken step, what is the company's belief about the impact on the company's businesses? So whether that disclosure should be done one paragraph disclosures or it should be done line to line basis. Second question is about which are the additional things to be included as a part of MRL. Khushroo, you need to unmute.
Yeah, sorry. Thank you. So as I mentioned earlier, the impact, the assessment impact has to be completely understood by the auditor. So here he does not have to reinvent the wheel again. I mean, one has, and another important point that I would like to bring out over here again is that as an auditor, whether now or even before or even later, one needs to work around with what the client has got in terms of its systems and controls. One cannot reinvent as an auditor that I need to get information like this or like that. He may have a query, and that query can be presented by the client, but he has to work around the systems and the controls of the client. Now, when he understands the impact of the assessment made by the client on the COVID, the impact could be specifically on certain components. Now, let's say if I'm auditing a bank or an NBFC, I'm just giving an example. The impact could be majorly on advances, which could be retail advances, which could be corporate advances. The impact could be on financial instruments. The impact could be on borrowings. And it could be therefore on some of these particular balances, which are, so it generally would impact the P&L, the balance sheet of the bank substantially. When this particular assessment is being made, having understood how this particular assessment is being made, the management bases the discussions with the board may have a detailed para in the financial statements in terms of what is the kind of impact assessment that they have done, what they believe could be the impact in terms of the future, what could be the impact in terms of the going concern, what could be the impact on impairment, inventories, receivables, and many, many other things. And at this point of time, the auditor will spend a good amount of time understanding this particular impact. The point that I'm driving out over here is that, as you are aware, the key audit matter is a prerogative of the auditors. It is forming part of the audit opinion. The key audit matters could be on information technology, could be on loans and advances, could be on provisions and contingencies, typically in a financial services company. If at all, his assessment of the impact of COVID, having been understood that particular assessment made by the management is very material to that particular component, if the auditor has spent a good amount of time understanding that particular impact and has spent a good amount of time auditing that particular component, then my view would be that in the key audit matter itself, the auditor should be actually talking about what are the procedures that he has performed on that particular key audit matter under the current environment, to give that particular comfort to the readers and the users of the financial statements that yes, these are the procedures that he has additionally performed to mitigate the risks arising out of the audit. Now, that is basically a key audit matter. But there can be a qualitative disclosure in the financial statements, in the notes to accounts, of the overall impact of COVID. And that is basically the one which the auditor will have to think through in terms of whether there should be a para of emphasis or not a para of emphasis. So this is something which one will have to do. As far as the second question on your representation letter is concerned, let me say at the outset that the management representation letters do not absolve any auditor anywhere in the world in terms of his liability in the event that he has not performed his work well. So maybe a management representation is required in terms of certain things being very technical in a manufacturing company or in a telecom company or in a power company where the auditor may not be best placed to understand, and therefore he has sought representation from the management to ensure that, you know, the impact of that will not vitiate the true and fair view of the enterprise. But if at all, I'm just giving an example that if the management has not carried out an inventory verification and he's seeking the representation of the management saying that, you know, everything is hunky-dory, everything is fine as far as inventory is concerned, and basis that if the auditor feels that, you know, chalo, mera kaam kuch nahi hai, I think management has represented the inventory is fine, let me carry out some bits and pieces procedures here and there, I think that is where the management representation will not work. So management representation could be on specific assessments of COVID, could be on specific additional comfort that the auditor may want on a particular component, and will serve the purpose only if at all the auditor has obtained substantial comfort basis such representations and has done the adequate documentation. If the auditor is not in a position to obtain otherwise by carrying out certain audit procedures basis what the management has represented, then those representations will have no place as far as audit documentation is concerned. Thank you.
Right. So I think Khushroo has rightly pointed out the two things. One thing is that use of CAM, key audit matters. That is one of the most important things where you are able to say what procedure you have performed and how you have confirmed that there is no severe impact on the financials. So use of CAM, key audit matters, and the disclosure in notes and accounts of financials is one of the most important things to disclose about coronavirus impact on financial statement of company. Second very important thing is that MRL doesn't absolve auditor from his duty. However, MRL has been taken as a statement where if something has been given to you orally on which you relied, you can definitely take as a part of your writing assumptions so that there is no confusion later on. But however, please ensure that there is no absolving of duties from taking MRL. Now, going to the next point is receivables impairment and financial assets. Liquidity is one of the biggest issue for today and tomorrow, because in the coming months it is going to be again one of the critical issue for any companies to manage. A lot of companies have a sales zero in particular month. However, the fixed cost is very high. So if the company has receivable from various customers where there may be a huge impact on impairment. So when the analysis is done by the auditor by doing is expected credit loss model for impairment testing. So how the management should have done this kind of assessment, and what should the role of the auditor as far as the considering the impairment loss on the receivables and other financial assets? Question to Manas.
Well, this question, of course, can be answered a little differently depending on what is the status of your receivables. In case it is an open credit, open data, so that means which is not securitized by any form, then it's a different question. But if you have a securitized creditor by way of back-to-back LCs or a performance guarantees, or by a kind of a secured line of insurance for those exports, then things are a little different in terms of getting into an ECL evaluation. Number two, I'm not very sure that in case of an Indian context, any of these points which I have raised comes into the play. Internationally, in case your data are factored, and then naturally, depending on the factoring consideration, it will be different, and the disclosures will be completely different in many cases. So ECL, in terms of a clear open data, is to be evaluated. There is no doubt about it. Generally, by past practices may not help as of now, because you don't know what will be the behavior of that debt or of that receivable tomorrow. It's very difficult. So one has to make I think Khushroo has very nicely articulated it, that one has to take a very pragmatic, judgmental call in these areas. Need not necessarily the best of the clients will not be tomorrow a problem, because assuming that your client, like in a healthcare services, your client is an airlines company, which you have provided services, right? Your client is probably an automobiles company, right? Who are, or a hospitality company who are having a trouble. So even if they are the largest of the world, one has to really, really evaluate it. Some of the state government receivables can also be sincerely evaluated, because most of the state government's dues may be delayed in the future. So it will be a bits and pieces. I will suggest as an auditee, there can be three issues to be summarizing. One is fully secured data, which is secured by way of a bank guarantee, a bank line, an LC, and so on and so forth. Number two, which are already sold off, so like it is discounted or unfactored, or in any kind of a securitization process it has gone through. And number three is an open data, which is a receivable, which can be any kind of a trouble. So the ECL for all these three things can be sincerely evaluated depending on the various cases. So an one-line answer will be very difficult, and industry to industry it will be completely different. But it's an important question, an important judgmental call one has to take.
I think the response to a lot of questions are in judgment. And that is the primary base of India's and IFRS international standards. But however, we need to live, because we can't have rules to decide what should be done. There has to be a judgmental call for each and every case. As Manas has rightly pointed out, that we need to look at the various buckets of receivables, whether it's a secured, whether it's backed by some kind of securities, or it is unsecured. If it is unsecured, then we need to look at and do ECL analysis rigorously. And there are definitely chances of having a more provisioning to do ECL. And over the period, as the situation is prolonged, then most probably we can have a huge impact by of ECL provisioning in the financials of the company. Now, coming to the next question. Yeah, please.
One point, Chintan, in this is that, of course, one has to also think through the process, particularly for the export receivables, where there are insurances available globally, right? So, sometimes the corporates do not take a call, even if there is a little bit of delay, and do not claim it in the insurance possibility on those little bit of, delinquated assets because of a long-term relationship with the client, right? But going forward, there can be a change of scenario, and auditors should be very mindful that can we, as an organization, if we have an insurance in place, probably even if in the past we have not used that insurance, but going forward we can use it, because things are very different right now.
Right. So management has to have a different kind of approach compared to what management is used to do since last so many years. Now, if you look at it today the market Sensex crashed by 2,000 points. And if you look at the investment by any company, and there are various standards which talks about the fair value measurement in the books of the entity. So when I'm doing the measurement of fair value and the market is fluctuating very high, so which are the challenges which are the issues that can arise First, in case of measurement of fair value, if it's an unlisted company, it's difficult. Even for listed companies, management sometimes feels that the fair value down is only temporary. So whether the temporary fair value down should also be considered or not. Can you, Suresh ji, throw some light on the fluctuation which is happening in the fair value and its impact on financial statements?
Sure, Chintan. Again, this is one of the most fundamental, I think, the assets which one has to assess for going concern. More importantly, these are forming part of my current assets and which is primarily being utilized to meet my current liabilities, so that there is no default both in terms of the supplier's liability or the banker's liability. Having said that, this is the time when you cannot go based on the past track record of any trade receivables. While there may be a triple-rated company, there may be a very high-rated company which they have been giving payments on time. But this COVID-19, I'm sure, might have put some limitation on those companies also to pay on time. And we all are in the same industry. So it is again a very, very critical now that how do we assess the trade receivables. I think Manas has clearly pointed out to categorize the receivable into three parts: secured, unsecured, or the normal one. But having done that, even for the management also, it is very critical to assess those receivables and basically the investment. Exactly, point out the market has been very volatile over the last two months, especially today. Now, this is basically as on reporting date, one has to actually see what are the terms and conditions, what are the likely compensation for any delay. For example, I give in my case, as it actually says, most of our dues are from discoms, which are government entities. And I told you that there's already a delay in my receivables. So how do I factor? Is there any credit loss? Answer is no. Because if you see our PPA, our long-term power purchase agreement, very clearly stipulated that in case any delay in your payment, you will be compensated by late payment surcharge, which is again interest amount which is higher than your working capital cost. So you have to see that whether the agreements with the customers provides adequate room for a compensation for economic losses, which you may encounter particularly due to COVID-19 situation. So again, this is a very, very important and very situational based. Every counterparty, actually material counterparty, you have to assess and take a call. Again, as you rightly pointed out, is a judgment. Yes, finally it is a judgment. It's not a scientific formula whereby you can really assess and say out of this 100 crores we recover 80 or 90 or 100%. It's purely a judgment. It again depends on how the things will move going forward. One of the most challenging based on industry to industry.
So taking clue from what Suresh ji has mentioned, that we need to do assessment of fair value. In case of unlisted securities, it is difficult. For listed securities, the prices are available. Whatever may be the fluctuations in the prices of the securities, however, impact in PL is required. Even if it's temporary, I don't know. But as on the reporting date, whatever fair value is that fair value need to be considered when you do measurement of this investment in the securities. Now, coming back to the next question to Khushroo ji, I think we discussed a lot of things about that the audit can be done digitally, audit can be done by working at home. But however, I must say that there are a few things which cannot be done sitting at home. And there are situations where we need to send our audit team to the company. So in that case, as an audit head, as a being auditor, what is our responsibility to see that the safety and precautions of the audit team has been taken care? What can be done here?
Chintan, I'm very happy that you asked me this question, because I think the message again to my brethren in the fraternity over here would be that under this lockdown conditions, neither the partner nor any member of the team should be risking their own lives in terms of going to the client. Now, I mean, people will definitely come and say that, you know, in my state, there is no issue, or in my particular city, there is no issue. The Prime Minister has very clearly laid out the band in terms of the lockdown, where and how much definitely is there in the public domain, and everybody knows exactly. People have to take their own responsibilities in terms of their own lives. So as organizations, I don't think any audit firm would be pushing their own people to go and do the audit out of the client premises. To what extent it can be effective and efficient? I would say it can be equally effective and efficient working offline and not from the client premises, which I'm sure Suresh ji as well as Manas ji have actually experienced how these auditors would have functioned offline and how they would have cooperated and supported the auditors and how they would have received the cooperation and support from the auditors in order to ensure that the audit is completely seamlessly done and the results are delivered. So today in a technological world, it is possible. And I can again give that same example that the biggest learning for me today would be that if there is a client in Vashi, and even after the lockdown is opened up, and if I have to just go and meet the client for a half an hour meeting or 45 minutes meeting, I would earnestly request a client that can I actually have a video conference with you? I will save 2.5 hours traveling each way, and I would be much more productive in terms of having a longer conversation with him and resolving his issues. So similarly, the audit can be very effectively planned. So let's say I'll just go step by step so that our people over here, whoever are the listeners, will understand. So first of all, the team has to be very, very clear in terms of the expectations from the clients. They cannot expect the clients to exactly deliver 100% on time, exact same information, what they had asked for. Now, how can the workaround will depend upon the materiality of the component, would depend upon the risks arising out of the audits, and would also depend upon the timelines that have been set. So when you take into consideration all these, an internal planning meeting of the team is very, very important. To communicate to the client is the second step. To be very clear in terms of what are the timelines, and to work backwards in terms of the fact that if at all there is a reporting date, let's say if the balance sheet has to be signed by the 15th of May, and these days you have to sign the balance sheet on the same day because they are actually being declared on the stock exchanges. So when people have to sign the balance sheet, when the company has to sign the balance sheet and the auditor has to sign the financial statements on 15th of May, how would he work backwards in terms of ensuring that the board gets the results on time, and at the same time, the audit can be completed effectively and efficiently. Having done that, it's very, very important to take the stock on a regular basis. So I'm just giving you my own example. I normally have a call with my teams, depending upon the timelines, etc., on a regular basis. It could be once a day, it could be once in 2 days in terms of what is the status. The people who are driving the audit as the leaders down the line below the partner are expected to take that particular stock on a daily basis. Communications with the clients have to be very seamless. Generally, it's been the tendency that the painful points or the points which are very open, neither the company may want to discuss it upfront, nor the auditor may want to discuss it upfront, and that may drag on for some period of time. Again, the humble suggestion over here would be that all these difficult issues and sort of very, very complex issues need to be discussed upfront. They need to be resolved. And in the event that for whatever reasons, one is believing that it is not possible to turn around the financial statements by a given timeline, the auditor has got the right to speak to the CFO. And if at all, at any point of time, he believes that the cooperation from the CFO is not there, he has a right to escalate to the audit committee chair and say that I'm not in a position to complete the audit. This will not happen because these days, every member of the management team is completely aware about the kind of difficult times an auditor would face and the company would face in the event that they rush to declare the results if the audit is not completed on time. So one is that, yes, you need to be careful. You cannot visit the client premises. You need to take stocks from the teams. You need to have discussions with the teams. You need to have regular communication with the clients. And more importantly, let me tell you that, yes, you may end up working much more, maybe 20% more, 25% more, given the fact that you are not online, you are offline. Your conversations, your meetings with the clients are much more. In fact, a lot of clients actually have told me that, we have been talking much, much more compared to what it has been earlier. I said, yes, that's because of the virtual world, that I'm not spending time on traveling, and therefore I'm able to spend time with you qualitatively on these matters. So that is how it can be done. My another suggestion would be that please make sure, because every audit, there are two deliverables. One is a full-blown financial statements, and the other is your LODR results. I'm talking about only listed companies. So the LODR results actually have to be signed off within 30 minutes of the completion of the board meeting. You need to plan out your logistics also in such a manner when the meeting is completed, the finance director or the CEO will sign the financial information. Then that, I would say the electronic signature of the auditor because he's not physically present. Electronic signature of the auditor has to be attested on the limited review report or the audit report, and that has to be uploaded on the stock exchange site within a period of 30 minutes. Whether it is a public holiday or not, it does not matter. Similarly, I would once again want to reiterate the fact that the financial statements are equally important. There should not be any delays in signing these financial statements. They need to be signed off also on the same day. And therefore, you need to work harder, and you need to work hard to ensure that all the disclosures in terms of notes to accounts, accounting policies, your financial statements, your auditor's report, the detailed auditor's report, the IFC report, the CARO report need to be delivered at the same time, at the same day. Please do not leave it for signature at a later point of time, because that may not be correct, and that is not the right thing to do. And that's something which I wanted to very clearly bring it out over here in this seminar, that your deliverables have to be dated as of the date of the board meeting, with no work to be done, except maybe archiving the files or maybe some fine tuning or something here and there. But all your concluding procedures have to be completed before the date of the board meeting, and your reports need to be signed off on the date of the board meeting.
Very important things which you have pointed out, Khushroo. I think the first very critical thing, if I just make summary, is that let us take the safety of our staff, our professional brother first. Try to do everything what is possible maximum only by sitting at home or sitting offsite, and then you carry out the work. And second thing is that plan well in advance, because you have limited time to do to and fro. So your audit should be planned, and for effective regular monitoring the audit is the most critical thing. Now, next point is the issue which is very critical in this situation. Right, when the coronavirus situation was there in India, the most important demand from all industry was to defer financial year by at least 3 months. Why? Because it was started in the 20th March, 18th March 2020. It is year end, and the year end is one of the most important period for any industry in the whole year. And everybody is looking to see that dispatch the goods from industry so that they can have a very good sales, and the targets are attached here there. But however, Finance Ministry has not extended the financial year. So that has resigned the most important issue of revenue recognition. So in case the goods have been dispatched from the factory and they are lying in the port, there may be a case where somebody has dispatched, supplier has dispatched goods to me and they are in between. They always stuck in this period. Then how can the revenue shall be recognized in this situation? That is the very, very important questions to Manasji.
Little question before I answer your question, Chintan. What you are precisely trying to address by this? If you can just repeat it once again, because you were a little inaudible in between. Yeah.
Basically, if the company has dispatched the goods, however, the goods has not reached the customer, and they have been in between the particular travel, and that has been lockout declared by the government. Because of the lockout declared by government, that goods cannot reach to the destination. However, it has already left the premises of the customer, and there are the issues about recognition of revenue. Can the company book sale during this period or not? What should be taken into consideration by the company for booking the revenue?
Without any dispute, I can only tell that we were not covered by this being an essential commodity. So we were not covered for any kind of a stoppages of goods at any time, right? Excluding for maybe one or two very, very odd scenarios. So we were very cognizant of that. 115 is very clear. We have adopted it. Even for the exported goods, we have kept very sure that 115 in its true sense is respected. We have not deviated from that. Our auditors also are very cognizant of the fact that exports for some time was also a little bit of in trouble in this country. But technically speaking, we did not have much to that extent. I can discuss because I'm right now in a silent zone for sure. But I can only tell you 115 has to be respected in its truer sense, and it has to go. So there is no doubt that there can be any leeway of revenue recognition beyond 115. We have followed that.
Fine. So I think India's 115 talks about that revenue shall be recognized based on 5-step principle. And it says that a transfer of control when happens, then you need to follow that particular steps and then you can recognize revenue. So in case the goods has dispatched, then we need to look at when the control has been transferred, whether that control is transferred when it reaches to the goods to the customer or not. So based on the test and 5 steps approach, which is defined under India's 115, one need to do assessment and then the recognition of revenue shall be done. Now, the next point, as we discussed about market volatility,
I just take 1 minute here. Of course, your point is very valid, but it will also depend on that what is your, particularly for the exports, because in the local market there are no much issues in terms of 115. But in the export market, it also depends on whether you are doing it in CIF, you are doing an FOB, who is taking the insurance, where is the bill of lading, right, and whether it is held by whom at what point, right? So those issues are to be taken care for sure.
Correct. I think a lot of things need to be considered. So FOB, CIF, terms and conditions, and when the control is transferred to customer in accordance with the India's 115. I think that will give us the basically how to and when to recognize revenue.
True.
So when we discuss about market volatility, at that time, I think there is a lot of onus on the management and industry that how can they really have awareness of the increase or decrease in result. Because of the volatility, there ought to be a lot of change, a lot of impact on the financial results. So if there is no clear communication to the investors, there is possibility that they may be misguided. So what is the role of the industry in this fashion to provide the disclosures and to basically give the information about the impact of COVID-19 on the stock market and on the financials of the company? So my question to Suresh ji.
So Chintan, I think the most of the people in India must be following the crude oil prices, because that's the right example to assess the market volatility. We all seen that WTI index, which was always positive, went to negative in the month of April, when somebody will actually will pay you to take out the crude oil. Very, very unheard situation where you need to give money to evacuate the crude oil, which was in the range of about $60 to $70. And not only the WTI, of course, it is confined to the American US market. If we see the Brent also, which is a very, very standard benchmark, very known in the international market, most of the crude oil transactions are based on the Brent only. So that Brent oil also, which was around $50, $60, today is hovering around 20, 25. And we have seen the kind of volatility in the oil prices. I think when we talk about the volatility, to my mind, the picture comes of the oil market only. Now, under that scenario, yes, it is an added responsibility both on the management and on the auditor. How do we assess that? Again, how do we report that? How do we factor that? I think here the standards is quite clear. Fortunately, we are not required, and correct me, I'm not the auditor, but fortunately, we are not required to comment on the volatility. What we have to know, we have to give an impact of sensitivity of the key parameters in our annual accounts. For example, if your borrowing cost goes by another 0.5% or variation in borrowing cost, or in a derivative, if the rupee dollar exchange moves to 77, you have to give impact or employee impact, not the volatility. So that aspect, if I see, yes, it is, we are not required to report the volatility, but as on cutoff date, 31st March, whatever the commodity prices, we have to give a real entry or adjustment entry. And we must have seen the recently the result declared by one of the most largest oil company, wherein they have actually disclosed the impact of COVID as an exceptional item below EBITDA, basically. So we all are aware that any such exceptional volatility, which we have seen in the past, is reported separately, because that is not a part of normal things. which somebody, as a reader, one should know that this is one of event which has happened, and the normal EBITDA is not going to be impacted going forward. So that the report as an exceptional item. Having said that, in terms of our industry, I have not seen this kind of volatility in our coal prices, basically. While the coal prices, by and large, were on a declining side, they were basically, but there's a range bound only. So we are not seeing much volatility in the coal prices, basically. But as you rightly said, this is again a very, very important aspect. This really impacts not only the bottom line, but the going concern also impact. So one, as a management, as an auditor, one has to assess the volatility and keep eye on that very closely.
Right. Thank you so much, Suresh. Now taking the question to Khushroo. I think we received a few questions on Caro, and the auditors are being basically like thinking, and they are in dilemma that where the inventory verifications is being not done properly, where the verification of the assets are not being done because of COVID-19 situation, then what and how it should be reported in Caro. So I think the few questions which I already shared with you, can we just deal with the questions about the verification of asset inventory, also the question on a default made repayment loan. I think then it will be like useful to the all viewers. Khushroo, Mike.
Thank you. I had mentioned at the beginning itself that because of the COVID impact, the procedures cannot be diluted. The conditions cannot be changed. The leniency of any kind by the auditor would not be appreciated. And this is something that is very, very clear. And I think Manasji also mentioned that given the fact that if the goods, let's say from the company, have actually left the premises of the company and may not have reached the premises of the customer, it doesn't mean that one has to dilute the standard on accounting, which is 115 in terms of revenue recognition. So COVID has not led to thinking of any kind where people can start thinking or organizations can start thinking that I should be subjected to an exception. No. What is the most important thing out here is that how will the company be able to carry out some procedures, or to some extent, what procedures will the company carry out in terms of ensuring physical verification of inventory or physical verification of assets. In the event that it could not be just done, and in my experience, I can say that it's never happened as far as my experience is concerned at this point of time. Companies have been able to do physical verification of assets. Companies don't sit till the end of March to do physical verification of assets, because either the assets are verified once in a period of 3 years or once in a period of 2 years or on a regular basis. Now, if at all their cycle was coming in the month of March 2020, let's say, for example, and they have not done this particular verification. So maybe the auditor has to make it very, very clear in the audit report that because of these circumstances, the company has not been able to carry out the physical verification, which was due in terms of the physical program, the program on verification. Now the auditor has to actually look at the alternate procedures. That is he in a position to corroborate the agreement between the ledger and the fixed asset register. And for that particular reason, if at all, maybe at some point of time in the future, let's say that he's signing the financial statements on 15 June or 20th June. Maybe at a later date, if that particular verification has been done and you roll back the procedures and you come to that particular statement of physical verification, statement of inventory or statement of fixed assets as of 31st March, if that can be corroborated, and if at all there are differences and those differences are very material, he can take cognizance of that as a good alternate procedure. But the fact that if the management has not done it doesn't mean that he should not be disclosing it. He has to very well disclose that it has not been done. But however, given the alternate procedures that have been performed, the satisfaction that he has derived, and if at all there are discrepancies, then whether they are material or not needs to be very clearly reported in the auditor's report as such.
Okay, fine, great. So basically, I think same judgment base and applying our audit procedure, alternate procedure, we need to come to the conclusion whether I have to qualify, emphasis matter, and also I have to give my comments in Caro. Now with this, let us go back to the next round of discussion, and that will be the last round because we are running out of some time. It is only 7:26, and we would like to end as soon as possible because we are late. last question I'll take with Suresh right now, that what are the cutoff procedures to be followed by the company to ensure the transactions are recorded within the period? Because these are the few things that are critical in the situation where on 31st March 2020, a lot of goods, a lot of activities are standstill. And we need to really draw financial statements by looking into consideration which are the end points for this. So cutoff procedure which has to be considered by the management and auditor. Can you please throw light on that?
Sure. Sure. Just a minute. Yeah. So I think this question, Chintan, if you recall my my initial remarks, I have covered in length the whole backbone of getting the accounts on 27th is precisely lies with the cutoff processes only. And when I say cutoff processes, it doesn't mean that we stick to a particular date and whatever transactions which need to be recorded, you account for, and then rest of the transaction you ignore. No. Very critical, any transactions pertaining to 31st March 2020 has to be accounted for in the same financial year. And that's where, if you see, we religiously follow the cutoff processes. As a part of our monthly closing also, there is very clear guidelines that by 7th of each month, my trial balance should be out. When I say my trial balance should be out, it should take care all my sales, which has happened during the last month, my procurement, my provision for overheads, and there's a clear-cut SOP for booking those transactions without any delay. Now, one of the things which I would like to share that how we are able to do that is basically in COVID-19 basically has clearly exposed a clear divide basically for those companies which have invested in the digital operating models, and they are in a much better position as compared to companies who are not invested in digital operating model. And that's where if you have the investment in the digital model, and whereas basically we are using the SAP environment, we are able to ensure that everything is being accounted for with the cutoff time. And as I am telling with you, we as a company, as a group, declare as a part of corporate governance, the board meetings 1 year in advance. So that is possible only with the help of the cutoff processes which are in place. And that's how, as a company, I can certainly share with you, it goes in a long way to achieve your timelines in a better way. And this also helps basically to reduce your discussion with the auditors also, because they are also satisfied that every transaction which is being accounted for is there. It helps a long way.
Yes, thank you, Suresh. So now I will go to Manasji. There are two questions which I'm coupled with in one question. First is that impairment testing is now very important and very critical because the indicators are there, external indicators are there which suggest that there may be a requirement to test the goodwill, there may be a requirement to test about the property plant equipment. Now for doing impairment testing, there's a need to look at the cash flow projections. Now in these situations, in various industries, I understand your industry is more stable, it's more beneficial industry. However, in this industry, there is possibility that outlook is not certain. I'm not able to even predict about what will happen to Corona after 3 months, 6 months, 1 year, 5 years down the line. So how can impairment testing is done? Which kind of cash flow projections should be done by management and used by auditors? That is question number one. And second thing, you can also throw light on the technology because you talk about the technology in your opening remarks. So how this technology is helping in the overall audit process?
Thank you, Chintan. Interesting question. Both are different types of a question. So I will take your second question first. And that's important because this is very critical. In one of the other forum when I was speaking about a year back, it was in Forbes, and this question came to me saying that investment in IT or investment in the digital space, how as a CFO, you do the IRR calculation or you do an ROI calculation. So this was a very fascinating question those days. Somebody asked me exactly 1 year and 2 months back. Answer what I gave at that time, it is quoted also, is that do you do an ROI or IRR calculation on your health investment? I don't think so. None of us do any kind of an ROI calculation on our health. So digital is a new health for industry. So everybody has to do a proper and adequate investment in the digital or IT, whatever way you call it. Both are North Pole and South Pole. IT is different and digital is different. Taking a clue from what Suresh has said, I tell you, in my company, from 2015 February, we publish our internal report covering all the 21 plus countries that we cover on the 48th hour from the month closing. So that means in case the month is 31st of January, in 48 hours, my report comes to me. And this is automated. And this is a 70-page report, which gives a profit and loss account, division-wise, business-wise, all kinds of analysis, including the cash flows and all sensitivity, right? And that we have been doing for 5 years now. And that robustness is also helps us in getting into what you have said. So the cash flow generation for a continuity of the business or impairment testing or a continuity or going concern is not just by sheer calculating on a cash flow on an Excel template. It does not really work. And let us not forget that one part of the cash flow calculation so far also happened to be is an options of refinancing or financing availability in the world. Now, even if you are a very large global company, whether you have a borrowing on the books or not, need not necessarily that your cash flow should be adequate to repay the obligation. If you have an adequate or proper process of refinancing it, that's also a part of the process of judgmental call. Again, for sake of repetition, I'm repeating, judgmental call on the cash flow sanctity of the company. That particular point is very difficult to say right now. Under the situation when the secondary market of the bond is exorbitantly high globally, whether a person will be able to refinance his existing debt on a primary market, both directly with one-to-one with the bankers or at the bond market or at any kind of mezzanine financing, it's a little difficult proposition to say with authority that it will be done. So that point, I think, is very difficult to really judge. But in terms of the cash flow, in a business, fortunately for us, is much more stable. I cannot really comment of the other industries where the issues can be much more volatile. For us, both in healthcare and in pharma, we know what are the projected sales that it could be, subjected to a little bit of supply chain issue. In case the supply chain is coming from, say, China or any of the COVID-19 debarred countries, there can be an issue, but that issue can be only a timing gap. So in terms of the cash flow sanctity and cash flow evaluation and its validation, I think we have a fair amount of understanding both on the operating cycle as well as the realization cycle, so O2C and the complete order to cash cycle. Or a kind of an overall model which helps us in getting into the operating cash that we are generating from the business, whether that is sufficient enough to meet up my at least obligations, which we have tested, and it is possible. One last liner on this. I think wherever we are doing it, one should be also careful in its cash flow calculation is the realization of the current assets. Right, so that needs to be a little careful as an auditor. For an organization, we know what it is, but since we are speaking for an audit community, I think a realization of a current assets should be evaluated a little more in terms of a sanctity of a cash flow and corresponding going concern.
I think this is self-explanatory, Manasji. I will go directly to Khushroo for the last question. As we are running out of time, there are a couple of questions I'm again combined together in one question. I understand that both questions are a little different, but these are very important questions for the viewers. First question is about subsequent events. I think India's 10 talks about that we need to look at all events between the reporting date and the date on which authorization to issue. Now, this event can be adjusting or unadjusting event. Now, as far as the measurement of inventory and receivable is concerned, there are few things where we may come to know certain issues of bankruptcy for receivables, or the inventory has been sold at a lower price. So how it's going to impact my financials as on reporting date? That is question number one. Second question is with respect to basically SMP. I think there are a lot of CA firms in Ahmedabad and across India. They are also looking to understand that for very large size firm, they are able to use the technology in a lot of way. What about SMB? What they should do in this situation? What should be their aim to really come up with this situation? Because this is now going to be the normal. So what should be the steps taken by the auditors today to ensure that they are able to provide the services with efficiency and effectiveness in the next coming period? So two questions to Khushroo, please.
Yeah, thank you, Chintan. I'll come to the first question. I think in terms of post-balance sheet and the impact on inventories, receivables, etc. I again reiterate the same thing, which even Manasji actually pointed out at the beginning, that the standards need not be interpreted differently for this particular event or for any other event. The standards are sacrosanct. You need to take into consideration some of the practical aspects. So as you rightly said, that the events which are subsequent to the balance sheet date could be adjusting events, which means that, the state of affairs as of 31st of March need to be adjusted on account of conditions existing on that particular date. And some of them could be non-adjusting, given the fact that, these are subsequently happening and those conditions were not existing on the balance sheet date. When it comes to non-adjusting events, if at all they are material, then definitely there is a disclosure. But when there are adjusting events, and if at all they are material from an auditor's perspective, then those need to be adjusted. So that has remained the same. It does not change at all under the current circumstances. So if at all somebody has actually become insolvent after 31st of March, conditions, were they existing as of 31st March at that point of time? That needs to be assessed by the auditor, and accordingly, if required by way of provisioning or if required by way of scaling down the receivable, that auditor can take that particular conscious call. But let's say that if at all there is a fire subsequent to 31st of March, and if at all there were no conditions existing on the balance sheet date, you may not take that into consideration. I think the point that I'm driving over here also, Chintan, and that would also come as my concluding remark, is that please, that's my request to the community, that please do not get carried away completely that the entire world has changed, the auditing world has changed, and therefore, you need to look at 110 things, and you may actually miss out on the focus that you are required to have as an auditor. COVID assessment is done by the management. You need to understand that particular assessment. You need to have your own questions, and you need to have your own thinking about what else can impact the company. But do not go out of this particular entire world and start thinking 120 things and start thinking having 150 disclosures and 15 or 20 qualifications and paras of emphasis in the audit report. That is not the content. You do not have to be shaken up completely. You carry on with your work. You just keep in mind the fact that, yes, the regulators have not diluted the standards. They will continue to review your file with the same rigor for 31st March 2020, the way they have reviewed in the past years. That is something which the auditors should be taking into consideration and not diluting any of that standard. Be focused on what you are doing. The second point that you mentioned about was on the SMB, small and medium practitioners is what you are referring to, right? Small and medium practitioners. Small and medium practitioners can be doing listed company audits, can be doing unlisted company audits. Again, where compliances are concerned, there is no specific leeway given to the unlisted companies as far as their comparison to the listed companies is concerned. It is the same. At the same time, when I'm talking about the auditing world, a different set of audit standards is not applicable to small and medium enterprises or unlisted companies as comparison to the listed companies. Even the auditing standards remain the same. So whether you audit a listed company or an unlisted company, your rigor in the audit has to remain the same. Yes, some of the accounting standards may not be applicable to an unlisted company, depending upon in which category that particular company is in terms of turnover, net worth, etc. That's a different thing. But you cannot dilute the auditing standards. Having said that, take into consideration the qualitative assessment, and I keep repeating, this is not a technical word. This is basically an outcome of the judgment and the professional skepticism of the auditor, having understood what the clients are doing, having understood their financial reporting system, coming to a particular conclusion as to what the impact is, and then going back towards 31st of March. Now, for example, let's say that the small and medium enterprises will be declaring the results somewhere in June, July, August, because you have got time till 30th September. Now, there is a lot of time that the auditors have in terms of really assessing the impact of COVID on the balance sheet as of 31st of March 2020. And those events, they need to take into consideration in terms of their assessment on going concern, in terms of their assessment of many other assets, including the impairment, etc. But you need to take that particular qualitative assessment in line with the standards. And also at the same time, my suggestion also would be that this is a great learning for everybody. So, I've always seen that when we learn something for the very first time, and this was a complete shock. In fact, one of my colleagues in the office was actually saying that I wish this could have happened in November or December and not have come towards the year end, because, I would have got so much of time to plan. I said, that is exactly called calamity. It does not come at your convenience. It does not come informed to you. It just comes and it strikes. And how well as an individual, how well as an organization, how well as a country, you can cope up with it. It's all under our own control. So the learnings out of this is that my suggestion would be that whether it's a listed or an unlisted company, make it a habit to carry out an interim audit for the period April to December or April to January, somewhere around February or March, so that you carry out the complete work till that particular cutoff date, and then you roll forward your procedures to conclude the audit for the next 2 months. At least you are confident that you have finished a good amount of work. And even if at all you have to work with the remote access, or if at all you have to work with some kind of a limited scenario, then in that case, you can work with that under that particular scenario, in a difficult scenario. So the learnings need to be sort of, well embedded for the future plan. And I must say that the small and medium enterprises, the practitioners can conduct the audit, keeping in mind the fact that do not dilute the standards, work backwards to see the impact, and whatever is required to be reported in the audit report basis their own qualitative assessment, then need to be reported. Thank you.
Chintan, you are mute.
Thank you so much, Khushroo. There's been wonderful interaction with all the panelists. And basically, if you look at the underlying, this is a first time and unique situation for life of everybody, whether it's industry or auditor, the first time we are facing this situation. However, what is needed is that we to just apply the standards, auditing standard, accounting standards, basic principles, and judgments. If we are around the fair, true and fair framework, then I think our answer ought to be right. And with this brief word, I am thankful to all of you. Before I hand over charge to the Secretary of Ahmedabad branch, it's my private privilege to have all of you hosted here. And Bishan Bhai, you have been really fabulous that you came in the start the session to set up everything, and then you come again to see that we all have been properly being done catering to that. Now charge over to Bishan Bhai.
Thank you, Chintan bhai. As said, खुद पर हो विश्वास और हो कर्म पर आस्था, फिर कितनी भी आ जाए मुश्किलें, मिल ही जाता है रास्ता. And with these eminent panelists and experts, what we can say that Black Swan event, there are challenges, but there are long-term opportunities. One has to be digital, and adequate IT preparedness must be there. That is what we can learn today. And I remember world is flat, what Thomas Friedman said in his book, and what we are experiencing currently, that we sitting in our home now, contacting and collaborating or discussing or deliberating with each other, and these are going to be a new future. So one has to evolve out of it, and that is what I can learn from today's panel discussion. And yes, prepared for inevitable downturn, and that is what in case of valuation or how we can do our up-to-date accounting, that is what we can learn today. So thank you very much on behalf of Ahmedabad branch of WIRC of Icai, Manas ji, Suresh Jain ji, and Khushroo ji. Sir, we request you to whenever we at branch needed, please come again and do shower your knowledge to our members. Once again, thank you very much, and thank you very much to our RCM Chintan Patel for moderating this session too nicely. We herewith conclude this session. Goodbye. Stay home. Stay safe.
Thank you.
Thank you.
Thank you so much.
Thank you.